So to my mind, Emily, the Chinese economy is very finely balanced right now between falling back into a bit of a slump where the deflationary pressures and the cyclical and structural factors that the Chinese economy has been contending with for a while drag down growth. And on the other side, we do have some, at least easing of the downward momentum in the economy, and certainly the fact that at least negotiations between the US and China are on. Suggests that there might be some breathing room for the government to start putting in place some stimulus measures to support the economy. It's very difficult, any of the data that you just spoke about or any other data that we've seen in the last few weeks that suggests that the economy is on a very positive trajectory. At best, one can argue that there is some degree of stabilization in the economy.
What would you need to see to have that confidence, or what metric would you be looking at?
So the overall growth numbers are, of course, important, but to my mind, the private sector numbers are really important, and that includes two components: household consumption, perhaps as proxy by retail sales or other broader measures, but also private investment. Now, in the last 2 or 3 years, what has been holding up the economy, of course, is a combination of supply side improvements, essentially fixed asset investment doing quite well, but that's largely investment by state sector enterprises. Private sector investment has been very weak. Of course, a lot of that is because of the weakness in housing investment. But even if you take that out, private sector investment has been quite weak. And then, of course, there is the continuing imbalance between the production side of the economy, as indicated by supply side indicators, and household consumption. And that means that exports remain very important for the Chinese economy. It makes the economy very vulnerable to the sort of external shocks that the Chinese economy has been facing, trade uncertainties, but also weak demand in the rest of the world. Now, of course, export numbers have held up reasonably well in the last 2 or 3 readings. Import numbers have been quite weak, suggesting that the economy doesn't have much domestic demand momentum. So I think relying on exports to keep powering the economy is a pretty dangerous strategy for the Chinese economy at this stage.
We did, of course, get some stimulus. We had some easing last month in the form of the interest rates as well as the RRR cuts. What more can China do?
So macroeconomic stimulus certainly helps, but at a time when confidence is the real problem, and we've seen many indicators that both household and private business confidence have been very weak, and they've stayed in very weak territory for quite a while right now. When demand for credit is not that strong from either households or businesses, making money easier to get or cheaper really doesn't do that much. Fiscal policy can be a lot more effective in these circumstances, and fiscal policy could include a variety of measures, including direct income support for households, tax cuts, and of course, reform of the broader tax system, especially the federal government to provincial government fiscal relations. But that comes to a much bigger point, Emily, which is that macroeconomic stimulus can certainly be helpful, but ultimately, what the government needs to put in place are some measures that suggest to the private sector that it has a handle on the economy and that it is going to put in place some much broader reforms. Now, of course, China is a big, complex economy. Nobody expects any big bang reforms. But I think showing that the government is very serious about continuing with market-oriented reforms, especially in the financial markets, but also in the production side of the economy, that I think can play a useful role in boosting the confidence of the private sector. The meeting that President Xi Jinping had a few weeks ago with some key members of the private sector certainly seemed to be a turning point, but we haven't seen much beyond that in terms of concrete measures to support the private sector. So that, I think, is what is really needed at this stage.
The IMF has slashed 2025 projections for China growth to 4%, down from an earlier 4.6%. We are quickly heading into mid-year already. How confident are you that China will meet its around 5% growth this year?
That, to a large extent, depends, Emily, on what the government wants. There is enough policy space that the government has to be able to hit the 5% target. But you're right that the longer they wait, the less effective that stimulus is going to be, and the harder it is going to be to reach that 5% growth target. The difficult challenge that the government faces right now is that in addition to the confidence problems I spoke about, a number of cyclical downdrafts are coming head to head with a variety of structural problems. The housing market is still not doing very well. Financial markets more broadly have been hurt by the confidence factors. Foreign investors seem to be quite concerned about the state of the Chinese economy, so capital inflows have not been very strong. If you layer on top of that the extended deflationary pressures that the Chinese economy has been facing, coming largely from this imbalance between supply and demand that I spoke of earlier, and you layer on top of that unfavorable demographics, the fact that the economy is not generating much employment with a number of indicators of unemployment, including youth unemployment ticking up, that is a very broad range of cyclical and structural problems that the Chinese government faces all at once. And then you have the external vulnerabilities kicking in as well, because clearly China is not going to face a very favorable external environment. So if you put this all together, it certainly suggests that the government is going to have to take some fairly resolute measures, both in terms of macroeconomic policy, but also these confidence-building measures to put the economy back on track. So I worry a great deal that the government might be waiting a little too long and might be a little too benign in its view of where the economy is right now.